I would now like to request the Chief Executive Officer, Mr. Joshua Igara, to present the numbers for the 2014 half-year financial performance. Mr. CEO.
Good morning once more. I just appreciate the group chairman. And I want to thank all of you who have been able to join us, members of the board, members of my senior management team, captains of industry, our big partner for KCB and a friend, Bob Colimo, for joining us. Thank you. Ladies and gentlemen from the media, let me just introduce some of my executive committee members who are here present, starting with Sam Makome, who is in charge of our Kenya business. Sam, you can salute to the team. I think we have 2 new members since the last time I was here. Avijit Mitra, who is a CIO for the group. He just joined us a few months back. And Paul Russo. Paul Russo is in charge of our human resources, Group HRD, joined us 2 months back. The rest, I'm sure you've seen them. You've had Rose Kinuthia, he's the Chief Risk Officer for the group. I see Kania, Joseph Kania is a Company Secretary. Judith, she spoke earlier, is in charge of our regulatory affairs and corporate affairs. I think the others must be coming. You know, my spectacles, I think I need a change. And a few other directors, Asiko, just James Asiko, who is in charge of our logistics, thank you very much. And the rest. Mine is to kind of welcome you this morning, and I'll start my presentation by looking at overall, where are we overall as a country? Obviously, it's always good to look at the nation. It's a very exciting time. I have always said this. Many times I say the same thing, but it's because I'm a true believer in our country, in the region and the continent. If you look at our expansion of the economy overall, even before we rebase the elements of the fundamentals for the economy today, round about 5%. You know, the first quarter, you know, the churn rate for the economy, churn rate at 4.1%. This is for 2014, similar to last year. I mean, it's still range bound if you look at it compared to what we have for this year. We do believe that we are sustaining the momentum as a nation. A lot of work is being done by the National Treasury, the Ministry of Devolution and Planning, and all of us in the private sector is something we appreciate. Of course, you will see that on the extreme right or on the extreme left, you will see that within the tourism sector, you've seen some kind of drop in the overall activity. But this is really on leisure-based tourism, which is an issue that we are a big lender in that sector. We're very confident. You know, we've seen this scenario before, but there is definitely a lot of activity happening on conference tourism, and I can confirm that to you, whether it's in Nairobi or in the Rift Valley or in Masai Mara. So that's an issue that is a deflation in the short term. But in the region, you should see that being able to contribute strongly, just like mining, construction, wholesale, transport. You know, what is really exciting about our positioning in this moment, and I call it being in the epicenter of change for our market, is all those sectors are showing positive change. It's not every single market. And if you go in the region, whether it's in Uganda or Tanzania, Rwanda, Burundi, South Sudan, you find that the curve is turned to the top for the performance of our economies in the region. And for us, your business is sitting in a very good position for performance and delivery of results. Obviously, good to look at what's happening on our exchange rates and currencies in the region. I could say, despite the challenges you've seen in the western side of Africa and southern part, we've seen some weakening of our currency, but well within our own initial targets last year. When we spoke a year ago or 6 months back, we said we see the range around 86, 87 for the Kenya shilling. And we're more or less there. And that just shows you around the strength of the policies or convergence of the plans that the government have put in place. And on top of that, you're perhaps very much aware about the very successful, you know, outlier Eurobond, which was raised just a month back. And that will bring in a little bit actions in terms of resources for the country and much needed foreign exchange. Obviously, inflation is quite well targeted. Most of our region countries are, the philosophy of managing inflation is definitely inflation targeting with a base of 2.5 and maximum of 7.5. So whereas we are at 7.4 as of June, it's still well within our upper band of the envelope. And we're engaging very closely. The key change from April is largely the increase in oil prices on a global scale. And partly, so that's kind of, if you look at non-fuel, non-oil index, you will be able to see that amount is around about the same at 5% for the last 6 months or the last 1 year. So we don't see that kind of pressure. Inflation is very key because, as you all know, as banks and lenders, the key issue today is look at what is the reference rate that sets up the pricing of our own loan, something I'll talk about as a part of my presentation. Actually, is the next slide. Because just this month, we've been at the forefront, not just as KCB, but as an industry, to be able to set up a good transparency by introducing two measures. And they could be a little bit complex. I've tried to explain this a little bit time to say on the left side is setting a reference rate that we call the Kenya Bank's reference rate. And on the right, 2 weeks ago, under KBA, we launched the annual percentage rate. These two aspects are creating what I call much more transparency in the way customers can first compare different financing in the market, so from bank to bank. And number two, gives a customer really, at the end of the day, the whole sum total of the costs that you will find from any kind of lender. So customers have more flexibility, more autonomy, more capability today to compare different kind of pricing. So the KBRL today, we are absolutely supportive, and we see that changing the delta for our pricing for our loans. Even before we went into this mechanism, I can remind you that in the month of April, we actually cut our lending rates for mortgages by 300 basis points to KBRL plus 3. So today you could get 12.9 mortgage rate way before we introduced this framework in the market. So as industry and as KCB, we are very much committed. We see a mortgage as a big accelerator in the way we can drive real transformation in our country going forward. And it's an area that will be very dynamic in the way we change the pricing of that sector going forward. The other factors remain, and maybe later on I could explain what does this KBRL plus K mean, but I think I've spoken a lot in the media about the rationale for it. For me, the APR gives you the end total cost of the interest rate component, your third-party cost, plus your bank charges together to say. And now we've actually introduced a smartphone app, both on Android, and you can find it also in any kind of market for your phone and be able to download and see for yourself. Obviously, we've been continuing to run on a clear strategic plan we promised you at the end of last year. So we continue to run on efficiency. I'm very excited, Chairman, that on efficiency side, in terms of, we look at the numbers released by other institutions in the bank, we're by far most efficient bank. If you measure it by the cost of income ratio today, we come down from 63% to 49.6%. I mean, I remember standing here a year ago or 2 years back, and we were saying we were 63%, and we had promised to reduce this cost by 1,200 basis points. And we are way ahead of our full year target as at the end of June. And I think that's good news for the organization and also for our shareholders as well. In terms of innovation, a clear part for me and a clear part for the organization is to say, how do we bring in more business partners to drive the agenda of transforming our country? And that's why we see today, I'm standing not just within my KCB banner, but I'm also looking at how do we engender transformation in our small businesses, in our nation, in our region? Can we bring in much more resources, much more capability? Can we be at the forefront, moving away from being bystanders on transforming our country and therefore transforming life? That's why I'm very excited to see this month we had a partnership we launched with Safaricom, targeting our small customers or small and medium businesses in the country. Or any other matter. You know, someone selling mandazi, someone is selling their own hairpiece, someone selling shoes, someone selling clothes. This is the DNA of our nation, how we want to grow into medium income. In terms of customer leadership, we continue to progressively run our agenda with our customer experience team and myself as a key sponsor for that. And our goal this year is to reach 5 million customers. We are on track. And I believe that our new partnerships with large organizations, for instance, the Safaricom, will accelerate our growth on our customer numbers, which is one of the reasons why we're very confident about that journey. In terms of our international businesses, we see rebounding of our business. There is basically a strong performance in South Sudan business, and I will show that you later in the numbers. I think there was a temporary challenge last year. There was a lot of worry. KCB is much more of a long-term investor in our markets. So, and we see our South Sudan business now resilient. In the last 6 months, we've seen growth compared to 2013, which for me is a sign that we are a mature business in those markets. We are actually opening up 2 additional branches in Juba this year. They are all complete, they are running. So it just demonstrates to you that in an area of when you see challenges in the market, we tend to look for an opportunity to enhance our delivery of services to our customers because they are our customers and we want to work with themselves. Just to remind you that we're still the largest lender by far in South Sudan market. In terms of, we set up new businesses, insurance. It's a very exciting business. In fact, this business is growing by more than 1,000% of a year-on-year basis. It's going to be the next footprint for our business. both whether it's on medical solutions, whether it's on typical general insurance products. And I'm very excited in the medium term, part of this business is likely to reach 15% of the group's earnings in the next 3 to 5 years. Something that is very exciting for our shareholders. And is a natural connection or convergence of insurance and financial services in line with our vision to become the preferred financial solution provider in Africa with a global reach. Obviously, we cannot run a business in the long term without looking at how sustainable, how are we integrating our business with community. Are we lending with sectors that injure the planet where we are? And therefore, sustainability from a return point of view for shareholders, from a return point of view for all stakeholders, including all communities we work with, our social investments with different kind of stakeholders we work with as well, and definitely delivering a much better return in terms of the long-term survival of our business is a key aspect. And we are actually following the footsteps of Safaricom, which has been an outlier in our local market. So the discussion we're having both at KBA at an industry level is how do we introduce sustainable lending, sustainability for green financing for all banks in the region, and perhaps take that into the capital market. I think it's important to look at where your organization is going beyond just making money. Where is it going in terms of impacting the planet, transforming the community and the society we work with, and thereby making more profits? We continue to run. Since last year when we launched M-Banking, we continue measuring how many transactions we have on mobile banking, 1 million transactions now. And that is really our target this year is to take that number to 3 million by the end of the year. And M-Banking last year and MobiBank are one way of enhancing customer service or customer activity. And if you look on the right, which is your left, is 54% of our transactions are today running outside our normal branches. And of that 54%, 30% or 25% is actually mobile banking. And that reflects the lifestyle, the nature of our customers today in the market. So the more we're able to deepen that relationship with our customers, the more we deliver service, enhance productivity for our customers, and deliver much more needed value for our customers in the region. So that trend, of course, you'll see that in the month of June, that number, it was much higher earlier. So May and June has been a little bit more difficult for us because we are migrating from the old positioning of the old system for EMV. Most of you have heard about that. And we migrated now into a new platform in the month of May, April and May. We're now complete. Although with technology, you never stop. So the bank is now working closely to enhance its own delivery to NFC. Because that is really the new technology for us, for our customers, which will be ready by the month of August. Again, to migrate our customers to a dual platform of EMV for cards and NFC together to deliver solutions for digital payments in the market. And I'm very excited. And then this year, the bank is launching an aggressive reinvestment on its core banking system, which we have, which is T24, to enhance into the newest version of version 13 or 14, an investment roughly closer to $20 million. So that's a bigger sense to say we believe in investment in our regions today. But everything about our business is not all about are we delivering numbers, are we delivering performance. I love this slide very much, and the next two slides actually. That this year, in the beginning, in the month of May, we launched perhaps one of the most transformative initiative in the country to say, can we partner with our communities? Every home today in Kenya and the region owns some form of livestock. Here we're showing cows, but my friends in northern Kenya is camels. My friends, you go down to western Kenya, could be chicken. It depends where you are. But can we enhance the level of productivity by partnering with themselves in terms of what kind of quality do they have, what kind of feed do they have? If you lift that kind of level of income for each of the families by investing into a fund of 1 billion in 4 years, you're able to start investing in the communities and enhancing their financial capabilities. For me, that is really leadership in our markets, and we must believe in our country. It's your business or your bank is investing much more every year to transform the nation through partnering with communities. So we did a first launch a few months back with the county of Baringo, and the objective is actually to launch it across the entire nation by the end of 2015. Of course, that 1 billion is just a small start. We have a number of partners internationally very interested in this program because livestock is at the nerve center for everyone in this continent. We've had other partnerships with an Akumat Global card, which is an NFC card. It was the first in the market. It's 1 million cards which we're running on this year. We launched our Berea card with KBS, which is also an NFC card, which really aims to transform the payment space within the transport sector. We are the first bank that was approved by the Central Bank of Kenya to issue these cards for transport sector. We have given a letter of no objections from NTSA. So we are in a good position today to accelerate the transformation of payments in our markets. And that's a new card that we launched. This month, we had a completely innovative new way of thinking and saying, can we go back to one side of our business and partner with other, more confident or people that could say, believe in our nation, believe in the vision of transforming our country. So we partnered with Safaricom to launch one of the most innovative way of transforming businesses, or what you can call small businesses in our country. Every time I think SME has become more like a cliche. Everyone is doing something with SME. The other day I was asked, what does it really mean? Am I an SME? If I run a small clothes business, am I an SME? It just sometimes as bankers we use very complex terms and we say this kind of codes. But an SME is really a small business. If you're doing something, it could be something you're doing on the side. It could be that you are going to work, and at the end of the day, you have some time on the weekend, you're selling shoes outside, walking on the street and selling some shoes. That is a small business you're targeting. Someone is selling some kind of, mahamri, on the street or in a shop. That's what you're looking for. You're running your own shop. And can we provide a one-stop shop for you to enable you a springboard to run and transform your business with smart solutions from Safaricom and KCB put together? Is something that really excites me, and I believe that the future of our country, just to give you the numbers, the small enterprises today contribute up to 45% of the GDP of our country. 45%. And this is statistics coming out from the Central Bureau of Statistics. So it's really statistics the government is using. And of that 45%, they are creating 90% of the new jobs. You all know the challenges we face with the young people today. We have 1 million kids out of primary school, 500,000 kids out of secondary school, 500,000 children out of university. We're not creating enough jobs formally to give them opportunity. But through this engine today, our target is to reach 1 million small businesses in 1 year. And we're offering many. So some of the challenges they face, small business faces, how do I do this? How do I do that? Can you help me achieve this kind of return? So Safaricom and ourselves offering, we offer starter pack, for instance. So Safaricom will bring in, you can get in your domain, for instance. I want my own website, with my own name. I want to have some kind of emails delivered. I have some bundles of data. I'll be able to get some airtime. I get a payroll solution. I've got a tax solution. I have an accounting solution. This is because you need to empower them to do their real part of their strength, running their business. Wherever they are, whether you're in Lamu, you're in Mandera, you're in Nairobi, you're in Kibera, you're in Kisumu, this is really what you're offering. This is available. And on top of that, the bank providing a financing on same-day basis. We are offering, you will be very surprised. When I speak a lot about this, people say, well, we're offering 1,000 shillings loan. Say 1,000 is too small. But I can guarantee you that 1,000 for a small enterprise every day, borrowed in the morning, paid in the afternoon, is 30,000. In 12 months, it's 360,000. And that transforms the business. It's the volume, it's the velocity that really makes a change in the way you run this. Then we put in a maximum loan of 1 million shillings. And this is unsecured credit. So it's not the issue is, okay, how many bags do I have? What things do I have in my bag to support me? We are saying, we believe. So we are pre-scoring the customers and saying, so you have smart tips to give you some ideas. I want to know this. So you get smart tips every day, straight. The way you access this is you go into your phone, and you can do that right now. *484#. You get an interactive menu from your phone. You run. You choose for yourselves. You get finance. You get other products. We have the Smart Club, which is very exciting. It's coming. We haven't launched it yet. But one way is to consolidate all our small enterprises together in a digital platform to share ideas. Because our challenges that we face are finite challenges. They are not infinite. What we face in our market, we've seen in other markets as well. What we face in Nairobi, we've seen that in Singapore. We've seen that in Johannesburg, seen that in Lagos, seen that somewhere else in London, somewhere else in India. So we can share that experience through a global platform. And when you look at it in the long term, if you access 1 million small businesses, you are able to tap into the 8 to 9 million micro enterprises that exist today in Kenya. This is the dynamism about connecting the nation, transforming, something that is very close to my heart, and something that really radiates very strongly. We can't do it alone. We don't believe about running a single race. We believe we're getting partners, and that's why Safaricom, with a strong belief of transforming lives, partners with a large institution in Kenya that says, can we transform the nation? It's our time today to run that race. And I can answer questions later on about how do we intend to run this. So we are running the first pace, and this is just the beginning of a much more progressive partnership between KCB and Safaricom, which is more radical to transform our country today. I look at, in terms of original businesses, so if you look at last year and this year in terms of total assets, Kenya delivers 79% of our performance. In terms of total assets, South Sudan is 11%. If you look at it where it is in terms of the first half of this year, is 10.2%. So not a major delta change in terms of that change. If you look at revenue contribution, so 82% is our Kenya business, 81.6% is on a Kenya business as well for 2014. So a fairly progressive driver. What we say this year, just to remind yourself, is we like the international businesses to contribute 15% in terms of total revenue and total return. So in terms of assets, we are anyway ahead. We were already at 20% vis-a-vis 10% that we had. Of course, your bank continues to be recognized internationally and locally as well. I've just picked up the international award. And it's not that I don't like the local awards, it's just that I picked up those three. Yeah. You know, we are a bank, one of the most highly rated bank in the world. We are among the top 1,000 banks of the world. We are actually bank number 864. If you look, 846, sorry. If you look at that, we have two banks in Kenya. One is ourselves, one is the other bank, which you probably know about. Our awards today, we were awarded also the most defining award this month for the group was the award which, the Euromoney Award for 2014. I mean, at the Global Award of Excellence, KCB was awarded as the best bank in Kenya. I think it's just if someone sitting globally independently assesses your institutions as delivering a transformative agenda that drives results for shareholders, I think I don't say more. The only thing I can say next is just to be able to discuss the results. Then GCR has confirmed our highest rating. We have the highest credit rating in our market. It's the same rating we had last year. And it's in preparation. This year, we will definitely take the bank into an international rating because we are very keen to take the bank into the international debt market to raise funds for a long-term investment for our mortgage businesses in the market. So this is just a regional rating, but I can guarantee you that our rating, in my view, for international rating will be quite close to the sovereign rating, something which we're working on the second half of this year. So that is really the snapshot what people internationally see for your organization or your bank. Let me just turn to the financial results quickly. So if you look at the financial position, and we're looking at from the asset portfolio. So overall, your bank's total assets, which is both lending, advances, investment securities, and cash balances that we have today, grew by 19%, from 370 billion last year to 439 or 440 billion. So an increase of close to 70 billion shillings in 1 year. I think that's a remarkable change in terms of the total portfolio of assets. Significant increase, 30 billion shillings, equivalent to 14% increase in net loans and advances to 244 billion. You can see a huge increase in balances with other institutions. We're doing a lot of trading in the interbank market ourselves. So that's 51 billion compared to 18 billion last year. And our group treasurer is here, Shalin Gudka, doing a good job. And if you look at it overall, our goal, which is the graphs on the bottom or the pie charts on the bottom, is to say, can we enhance the amount of assets which you're investing to deliver return? So 55 and 22, 77%, slightly lower than where we were last year. But I think our key objective in the first half was to kind of building much more assets and also to drive more effective lending in the markets where we are in. So we should see more accelerated growth in the second half. So 30 billion is what we grew at more than last year, but first half. So we perhaps will be reaching already in our target. This year we wanted to grow at 13% by the full year. We are at 14% so far for 6 months. And looking at the size of the growth, for me, it's an exciting story for our organization. And I think we perhaps will accelerate the next stage of growth in the second half. And that tells you in terms of what is the concern we have had in the past compared to this year and last year is really the issue of non-performing loans. The question you asked me last time, where are we? So as at June, we are at 8.8% at group level, a slight drop, 50 basis points reduction, but not good enough from our target. Our target was to be at 6.3 by the end of June, 6% by December. All I can confirm is that we've seen a lot of actions in the last 3 weeks and most of you have read after the budget was approved, a lot of our contractors have been paid. I can guarantee you that from the payments we have received for the last 2 weeks from some of the customers who had challenges, our revised, by the end of July, NPL ratio is down to 6.4%. And I mentioned earlier last year that we had 2-3 customers who had a challenge. Those payments have now taken place. It takes us 6 months to regrade our customers coming back, and we don't do it unless payments are made. So, for people like Marcel in the room, we are already in that track of achieving our target of 6%, which we promised in the beginning of the year. So 8.3 in June, we have got major payments. I think we have one major customer paid in the last 3 weeks, close to 3 billion shillings. So that will see us progressively improve to 6.3. The area we've seen a weakness is in South Sudan. We continue to monitor that very closely in the market in terms of NPL ratio. But as I said, you will see the numbers when I spoke about that. The next story, which is very good, is around coverage ratio. Of the non-performing loans, how much of that have we provided for? A year ago, this question was asked to us, and we said, can we increase that to 70%? So in roughly 1 year, we moved from 55% to 69%, which means as we continue recovering debt from our customers, we are not taking the entire right back to the P&L. We are actually enhancing our provisions. I think at 69% is perhaps the highest rate in the market today. Should we enhance it? Maybe the maximum we had promised is 70%. I think that's more likely like the regional benchmark. The balance, we have sufficient security. Most of our large debts are secured. So you can say that that's right. The coverage shows that we are over-provided in terms of the debts that we are offering in the market. And I think the market will move towards 60, 70% where we are. On the left side shows you that we are a very dynamic lender. So we lend to all sectors. If you look at construction on the roads, and I was very happy most of you heard about yesterday's launch about the new framework of funding road construction. We are in the background as KCB. Your bank is in the background supporting the agenda for the nation in terms of developing huge infrastructure, 10,000 kilometers, the first 2,000. So we are at time to work hand in hand with the national government and the county governments to deliver that vision. It just tells us that we have a lot of experience in construction, agriculture, mining, trade, transport, and my slides will be available later on. Let me look at on the funding side. So the funding portfolio, what we've done in the first 6 months is to continuously, aggressively grow our customer deposits. So a huge increase from 287 billion to 351 billion. That's a significant increase for 1 year. It's at 22%. It's perhaps the highest increase for us in the recent past, which shows that we are quite well prepared to support the lending portfolio for our businesses in the next second half of the year. I think it's the single highest growth we've seen in our business if you look at the last 18 months. And that's largely, so if you look at the bar graphs on the pie charts, you'll find customer deposits are 80% of the portfolio of your bank. Last year, same time, we were 78%. And so that enables us to grow. So we've grown 14% on our assets. We've grown much more in terms of our investment in securities for government securities, but we have a big opportunity. So if you actually look at our loan-to-deposit ratio, it's a little bit on the lower side now. We are at 70%. So we have enough scope to be able to build up big. We have a lot of projects in the pipeline in the second half. Last time we looked at our portfolio for projects for financing, we are at almost 60 billion shillings of projects for disbursement. So we're in a good space today in terms of funding portfolio. I like to look at this slide just to remind where we stand at today. Are we adequately capitalized as an organization today? Where do we stand? So if you look at the new Basel III guidelines issued by Central Bank, so whether you're putting in the additional market risk and operational risk, in addition to the lending risk we had before, our total risk-weighted assets are 292 billion. So from a core capital point of view, we're at 20.2%. The target is 10.5. If you look at total capital to total risk-weighted assets on the right or on your left, we're at 26.3. The target is 14.5. So I know there's a concern or questions raised in the market that the banks need to raise capital. Your bank is adequately capitalized today. So we are not looking for additional capital in the market to fund the requirement of capital adequacy. You must appreciate the bank looks a little bit 3 years ahead for its capital planning purposes. And from our point of view, we have a surplus capital of 15 billion shillings for major investments for the bank in the next second half and next year. I speak about income statement as I come to a conclusion. So our interest income, we cut our rates for rates to be able to push the agenda of lending, 7%. And I think that's a sign that banks are responding in the last 2 years to the reduction on interest rates debate. So we are on the forefront that interest rates would not necessarily be the biggest growing area for our markets. I just give you some statistics. In 2012, the lending rates were 20%. In 2013, the lending rates were 17%. In this year, the lending rates are 15.6%. So almost a 200 basis reduction in 1 year, 400 basis reduction in 2 years. So the discussion is that banks are listening to support the economic activity for the nation. And KCB is on the forefront. In fact, we have some of the lowest rates in the market today. And they still deliver returns for our customers. Our foreign currency continues to grow at 25%. It's a very strong growth, and we're very much excited. I'm very thankful myself for our group treasurer. A lot of work is happening at the region level. Our fees and commissions, a key area of growth, 13% growth to 5.6 billion. We'll continue to grow as we enhance our customer numbers, enhance our technology, enhance our vision for the numbers we have. Operating income overall growing at 13% to 26 billion. Operating expenses well managed. You saw that from the cost income ratio. I say that we are at 49.6. Exceptional items, this year we don't have any. Last year we had a restructuring, if you remember, when I took over the CEO, so that was finished. And on net provisions, we've had to increase our provisions. I said earlier, largely South Sudan provisions for 300 million, and Uganda specifically with one customer for 300 million. So that is the issue that we've seen in the first half. But if you look at our cost of risk, which is how much provisions we have towards the assets we have today, it's still around about the 0.9 to 1%, which is in line with what we said earlier. So it's well-managed business, and overall delivering 11.7 billion shillings of profits, 16% increase compared to the 10 billion last year, and the full year last year of 20 billion. So we are way ahead of what last year. On a net basis, 8.2 billion versus 7.2 billion, which is 14% growth. And largely driven by higher growth in our lending portfolio today, growth in fees and commissions in the first half of the year. We continue to focus on non-funded income and partnering and pushing our agenda with the strategic partnership I've announced and spoken a bit earlier today. So that delivers for you, and I think as the chairman mentioned earlier, it's a good story. We continue with our momentum for growth in the second half of the year, and we thank you very much for your support. I did say earlier, I will show you, in terms of contribution. So Kenya continues to deliver on this side, 91.6% of the performance, 92% last year. I think the issue you've had in the first half of this year is on Uganda, but on South Sudan, 7.1, 6.9. So you can see that change, that on a year-to-year basis, South Sudan still contributes more to the group to last year, despite the challenges that you say or you've seen in the market that it's a difficult market. And whereas we had targeted 8%, I think 7.1 is better than where we were last year. A new entrant is the bank assurance. Bank assurance is the newest business on KCB Insurance, contributing 1.1%. I said earlier it's a new flagship for the group. We choose that contributing significantly in the next 2 to 3 years. But overall, your business runs with the vision that we agreed earlier and we communicated. And all I will say, thank you very much, and I'm up for questions. Thank you. Thank you.